Welcome to Organizing Life's Daily Demands. My name is Peter Gordon. I'm the president of New York Financial Organizers. We're daily money managers. We help people pay their bills, file insurance claims, and do all the non-investment side of personal finance. And essentially, we help people organize life's daily demands within the world of personal finance. And the purpose of this website is to introduce you to other professionals who help organize different parts of life's daily demands. And today I'm thrilled to welcome Joseph Nivin of the law offices of Joseph H. Nivin, PC. And how are you doing today, Joe?
Pretty good. Thanks for having me here.
Oh, my pleasure. Joe and I have known each other for a number of years, both personally and professionally. He's a wonderful attorney. He's always available to answer questions that people might have in the world of family law and divorce. And today we'll be talking about his services, obviously. So, Joe, give us a little bit of background about yourself.
Sure. So I grew up in Long Island, even though I was born in Brooklyn. I went to the University of Pennsylvania. I graduated in 2004, went to Brooklyn Law School, and I graduated in 2007. I started out as an attorney for the Administration for Children's Services, where I prosecuted child abuse and neglect cases. I founded my practice in 2010. And since then, we've been helping people in the New York metropolitan area with all their family law litigation needs, as well as uncontested and contested divorces.
What made you decide to go into this area of law?
Well, the backstory isn't as exciting as I would like. I applied everywhere when I was graduating from law school, and what I knew is that I wanted my own cases and that I wanted to be in court. So I interviewed for the job at the Administration for Children's Services. I told my interviewer what I was looking for, and he said, well, this is the place for you then, because you do get to be in court every day and you get your own cases. So I got a job over there and I got 90 cases.
Whoa.
So it worked out pretty well.
90 cases.
I decided to start my own practice. I was inspired because a friend of mine was going out on his own. I said, you know what? We trained together. If you could do it, I could do it too. And the rest is history.
Yeah, no, it's great. And I know from the time I've known you, your business has grown quite a bit. And I think that's all because of the service that you offer. So why don't we talk a little bit about specifics, which is, in this case, we're going to be talking about divorce, right? So what kind of planning should somebody do if they're about to get divorced?
So the planning really involves becoming as organized as possible. At the outset of a divorce, if it becomes contested, meaning if you need to go to court, then it is expected that you complete what's called the statement of net worth. And I'll back up a second, because very often, if we're trying to avoid going to court, we'll also exchange statements of net worth, and they are very detailed schedules of people's assets, their expenses, their income, their liabilities, and that does involve knowing your financial condition very well. It's a lot more stressful if you have no idea what your finances are. Now, if you do go to court, then it will be expected that you share 3 years of credit card statements, bank statements, tax returns, retirement statements, brokerage account statements. So it's going to be important walking into a divorce to have those statements ready. If you have no idea where they are, if you have no idea how to get them, then it's going to be a lot more time consuming. It'll be a lot more stressful. One thing to avoid is making any major changes. So a lot of people come to me and they say, well, listen, would it be best if I have less money in the bank? Would it be better if I have less money in my brokerage account? Would it be best if I start demanding that the other side pay more expenses? And what the courts are looking for is that as little as possible change when you walk into the divorce. The courts are very suspicious of divorce planning because they don't like when people try to engage in what's called self-help to get an advantage over the other party. But if you're more organized walking into it, then that will be a very significant benefit to somebody who's about to start a divorce process.
And how many people come in organized?
Very few. But I will say that at the consultation, we do tell people how important it is to be organized walking into the process. And fortunately, most people do listen to the best of their ability.
Oh, that's great. That's great. So, the situations come up where the one of the parties might have a pension that they're both relying on, for retirement. How is that handled?
So there is a formula. It's called the Majauskas formula, where
What
the way
was that?
that works,
Say that again.
Majauskas,
Majauskas.
Majauskas, and it is a little bit complicated. And I do have a tendency to speak quickly. I'm a New Yorker, as well as you are too. So if you tell me to slow it down, then I will listen. I won't get offended. So the way that it works is that the first thing they do is they figure out how many years of service time were during the marriage. So let's just say, for example, that the person has been working for 15 years at this position where they have a pension, and they've been married for 10, then the amount of service time during the marriage is 10 years. Now, when the person retires, then the denominator, so to speak, will be the total years of service time. So let's say the person retires after 30 years of service, and they were working at this job for 10 years during the marriage, then the numerator is 10, the denominator is 30. So that means that 1/3 of their service time is subject to distribution. Now, in I would say the most common percentage that the non-service member, what's called the alternate payee, will get is 50%. It doesn't mean that that's standard. Doesn't mean that that's required. Much less. But usually, it's 50% of the pension that person gets. So with that, in this specific example, where 1/3 of the service time is subject to distribution, then effectively what that means is that the alternate payee will get 1/6 of the pension.
Right. Got it. And I'm sure this is a common case where somebody owns a home. How is that handled?
Well, the simplest case would be one where they purchased it during the marriage and they're both on the deed and there's nobody else that is on the deed. In which case, for the most part, they'll both be entitled to half the equity in the home. So there are two ways to split it. One way would be what's called a buyout, where one person stays in the home and they purchase the other one's interest, in which case then it'll be expected that the other spouse, that the one being bought out, will take themselves off the deed. Or they could just sell it and split the equity minus any kind of closing costs. It becomes more complicated when there are other questions in it. Like, for example, I was handling a case just yesterday where it was purchased during the marriage, but the wife and her mother are the owners. That makes things a little bit more complicated. Another one is if there's what's called a separate property credit. Usually what that means is that one of the spouses put money that was earned prior to the marriage into the down payment, and that spouse will get a credit for it, meaning that portion will not be subject to distribution. Another might be where one spouse uses an inheritance. An inheritance is what's called separate property. That's not subject to distribution. So if one of the spouses uses an inheritance for the down payment, then that spouse will also be credited with it. Of course, it becomes more complicated if one of the spouses own the home prior to the marriage. Then the question is, how much of the appreciation of the home is subject to distribution? Additionally, there are what are called credits. So a fairly common scenario is one where one of the spouses is paying all of the carrying charges on the home. They'll get credited for that because anything that's earned after the divorce has started is also separate property. So there are a lot of questions unless it's truly a simple case.
Yeah. And how do you handle it when when you tell somebody these rules or what the situation is and they don't like what you have to say?
Well, what I tell them is I say, I'm not going to lie to you because I'd rather that you learn this now instead of when it happens to you.
Right. Makes sense. Now, very, very often, one of the spouses is the major breadwinner. And how is that handled? So how is, if somebody says, well, how am I going to support myself? if I get divorced?
If the difference in income is significant enough, then almost definitely the non-moneyed spouse, as we call them, is entitled to maintenance. So we're not talking a case where, let's say, one spouse earns 120, the other one earns 110. But if we're in a situation where one earns 200 and the other one earns 40, then the spouse earning 40 will be entitled to maintenance. Now, it doesn't mean that it's going to be easy. It's always very difficult when you're going from one household that needs to be supported to two households that need to be supported. But what the goal of the court will be is to ensure that nobody ends up destitute.
Right. And what if one person doesn't work or has never worked?
Well, it depends on the situation. In most cases, the court will expect that that spouse start looking for work. It's one thing if it's a gray divorce, like if it's two people that are very elderly, then that would be a different story. But if it's somebody that's clearly capable of working, even if there's been an informal arrangement during the marriage that one spouse works, the other one doesn't, then the court will expect that that person, if they're capable of working, look for a job.
Right. You mentioned gray divorces. Are you seeing more of that?
We are. We absolutely are. I think that what's happening, there are a lot of theories about why we're seeing that trend, but I think that a lot of it is because the first people that lived without there being a stigma of divorce are now aging. That's really it. I mean, I see cases where one spouse wants to move to Florida and the other one wants to stay in New York, and they decide to go their separate ways. And of course, there are the other common scenarios that apply to everybody, including elderly people, like where people simply fall out of love with each other.
Right. And I guess also that we're living so much longer now. So
that's true.
There's more opportunity for things to happen over time.
There have been some commentators that, and it's kind of darkly funny, that have said, well, you know what? The fact that we're living longer probably contributes to it, because there are probably some people way back when who said, you know what? I'm 70 years old. I probably don't have much longer to live. Why would I bother getting divorced now? And now a 70-year-old can expect to live a lot longer. And they may say, you know what? With the amount of time that's left, I simply can't handle it.
Yeah, no, I certainly see that in my business about the, people living longer is affecting their finances. But if they have, their investment accounts, like a 529 account for children, what happens to them in a divorce?
Typically, with a 529 account, they expect that those accounts remain intact and be used for the purposes that they were created for, to pay for the children's education. As far as brokerage accounts, there are a lot of choices. And one thing that people need to keep in mind is capital gains. Typically, if there's one spouse that has an investment account and the other spouse that does not, the spouse that's not on the title has absolutely no interest in getting stock. Right. So I do see this a lot where the one that's holding the investment account will say, well, you know what? I can talk to my institution and know that they can just transfer some stocks into the other one's account. But the non-titled spouse has absolutely no interest in owning stock. What they want is cash. So what often makes them less unhappy is that, let's say that I'm representing the one that has the investment account, then I'll say, well, you know what? I know that he has $10,000 in stock, but you're not getting $10,000 because there are all these capital gains. They're usually not too happy about that. But that is the reality, is that $10,000 in stock is typically really not worth $10,000 because the capital gains have not been paid on it.
And what's your experience with trying to explain that to people?
It takes a long time and a lot of frustration. I mean, the ideal would be, there are some cases like this where I say, hey, listen, here's the choice that you've got. And I say this to the titled spouse. They don't get it. So if you do have $5,000 in cash somewhere, it may very well be worth you simply eating the capital gains taxes that you have. So this way you don't have to go through this anymore. But I'm not going to tell you to do it because it's not fair to you. But this is your life, and I know that you're the one that is going through the stress of it. So tell me what you want to do. And then it's really up to them. That's when you're the moneyed spouse, that's simply a consideration. that you have, is that the non-moneyed spouse probably does not understand finances as well as the moneyed spouse does.
Right. That makes sense.
Yep.
So we're going to wrap up soon. So what do you like about what you do?
You can make a huge difference in people's lives. You absolutely can. Even with the so-called simple cases. Yesterday, my paralegal called somebody up to let her know that she got her judgment of divorce. This was an uncontested divorce. It did not require nearly as much time as a contested divorce would, but she was very, very happy that this part of her life was over and that we got her through it. And then with the more complex cases, there was a case that I handled recently where I got somebody in order of protection against an abusive spouse. And it gave me a lot of pride to keep this person safe from somebody who was abusing her.
Yeah.
And I've seen it. I've gone, I've had people on the other side that represent themselves in contested divorces. And I see how much of a difference a lawyer can make, where we coach people on what battles they should fight and on what battles they should not fight. And also coach people on how to make the case as simple and as short and as inexpensive as humanly possible. And that's simply something that's not available to pro se litigants.
Yeah. And finally, what would you suggest to somebody who's starting to consider this in their minds?
Yeah. I would say get organized. That's kind of what I opened with.
Right.
I think that what people need to realize is that when you file for divorce, everybody thinks it's the end, but it's really not. It's the beginning. The divorce process is very stressful. And I would say let go of your anger as early as humanly possible, because it's not your friend when you're going through a divorce. I've definitely seen a lot of people waste a lot of money simply acting out of anger. What the court system is designed for, it's not designed to handle emotional situations, even though divorce is an emotional situation. It's designed to create some kind of logic and pragmatism out of emotional situations. So when we have a system that you're relying on to get you through it, that is rational and you're emotional, then you're going to end up wasting a lot of time and a lot of money. But if you can come into the process thinking practically, then that is the best way to get you to the other side. And also, if you want justice, you go to church. You don't go to court.
That's great. That's a great way to end. Well, Joe, thank you so much. And what's the best way to people get in touch with you?
So you can go on our website, www.nivinlaw.com. We do have a chat feature. And you can also call our office at 347-642-0376. 347-642-0376.
Right. And that information will be on the if you're watching the video, it'll be below the video, or it'll be in the podcast information. So Joe, thank you very much. That was really, really interesting and educational. And I highly recommend people contacting you if they have any questions. And Joe is always happy to answer any questions you might have. So that's it for this episode. I look forward to seeing or hearing. I look forward to you hearing or seeing me at the next podcast show. Thanks very much.
Thank you, Peter.